Hello, I'm Ron Wilson and welcome back to PD Sessions. The Coalition has won the federal election and an independent report has outlined what one Big Four accounting firm feels the incoming government must achieve to ensure the Australian economy has long-term sustainability. In international news, India's economy is forecast to be worth $5 trillion by 2020, while the US and European economies continue their steady recoveries. In other news, ASIC has unveiled what it'll be looking for when completing its FOFA reform surveillances. Trevor Trahan has the details.
The Coalition won September's federal election and has claimed the new government will encourage strong economic growth and live within its means. The Coalition's budget plan claimed to target less debt and greater infrastructure spending, with cuts to be made from the price on carbon and contributions to foreign aid. Ernst & Young has released a report calling for the incoming government to action major economic reforms to ensure the Australian economy has long-term sustainability. It urges the incoming government to set out a clear and credible fiscal policy that charts a path back to surplus, refine and reorient Australia's tax system to support growth and participation, develop a comprehensive economic strategy and the infrastructure to support it, increase productivity, implement a carbon policy that creates certainty and achieves emission targets, reform defence to maximise its services under fiscal constraints, change the funding model for human services delivery, develop the right skills to support our future economy, and strengthen Australia's balance sheet. After the official cash rate hit a record low of 2.5% last month, the RBA has opted to maintain the same level in September. The RBA said the Australian economy continues to grow below trend, and this is expected to continue in the near term. For the first time in 5 months, new home sales fell in Australia, according to the Housing Industry Association's data for July 2013. The HIA New Home Sales Report, a survey of Australia's largest volume builders, showed that total seasonally adjusted new home sales fell by 4.7% in July 2013. The first decline since a 5.3% drop back in February 2013. Despite data showing that India's GDP is continuing to slow, a new report by Dun & Bradstreet has forecast that the Indian economy is heading towards steady growth. Highlights from the report, India 2020 Economic Outlook, include India is expected to be more than a $5 trillion economy by financial year 20, equivalent to Japan in terms of GDP in US dollars as of 2010. India's growth is likely to be driven by a rapidly expanding services sector. Strong growth in domestic savings will support domestic investment. Although consumption will continue to be the major contributor to GDP during the current decade, its share is expected to decline gradually due to a significant increase in share of domestic investment. Since the US employment trough in February 2010, the US economy has generated 7.3 million private sector jobs, according to analysis by Wells Fargo. Around 40% of the new jobs that have been created over the past 3 years have been in industries in which wages are above average. Europe continued its slow crawl towards economic recovery when in August, the economic sentiment indicator increased sharply by 2.7 points in the Eurozone to 95.2 and 3.1 points in the European Union to 98.1, according to the European Commission. Economic sentiment improved in 14 Eurozone countries and in all of its 5 largest economies, including the Netherlands, up 5.2 points, Germany, up 3.3, Italy, up 2, France, up 1.6, and Spain, up 0.8. In the wake of the introduction of ASIC's FOFA reforms, Deputy Chairman Peter Kell has named the practices which will raise red flags for the regulator when it conducts surveillances on advice provided after 1 July 2013. Writing for Cufflinks, Kell stated the success of FOFA relies on the financial advice industry meeting its legal responsibilities and applying professional judgment. The 5 red flags include licensees taking advantage of exemptions from the conflicted remuneration provisions, over-servicing clients. ASIC will be on the lookout for advice providers who put their clients into structures which are more complicated than the client's circumstances demand, ineffectively managing conflicts of interest created by vertical integration, keeping clients where they are even if their circumstances or needs have changed, and avoiding giving advice. ASIC will be focusing on examples of existing businesses who have changed their business model to offer factual information or general advice only. ASIC has reminded licensees giving personal financial product advice that they should quiz their research provider to ensure they are providing quality research. From 1 September 2013, research report providers need to comply with ASIC's updated guidance in Regulatory Guide 79, or RG 79, Research Report Providers Improving the Quality of Investment Research. ASIC strongly encourages all advice providers to test the market for investment research and re-evaluate the product offering of current or prospective third-party research providers by asking questions about their business model, conflicts of interest, and how they produce ratings and what they mean. According to APRA's June 2013 quarterly superannuation performance publication, total estimated superannuation assets, which include the assets of SMSFs and the balance of Life Office statutory funds, rose by $217.2 billion, or 15.5%, to $1.62 trillion over the 12 months to 30 June 2013. SMSFs held a larger proportion of superannuation assets than any other sector, accounting for 31.3%, or $505.5 billion. This was an increase of $4 billion on the previous quarter and $67.4 billion over the 12-month period.